The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. Hope everybody turned their clocks up. I used to hate that when I was younger going to school. You just rocks your world when you're a kid and you got to get up earlier. Let's take a look at the S&Ps, and just to kind of, start off the show with something relatively important. Let's take a look at what's going on here with the statistics of kind of what happened. And we talked about last week that 2072 area being that target-rich environment, and we talked about some cracks in the armor with some of our speedometers up here. The weeklies haven't folded over yet, but remember, our weekly information is not going to totally populate, and I got a weekly sort in here of new box attempting to appear, and that is a huge percentage on a relative scale. So let's take a look at that. Now 15%. So what's going to happen here is a lot of these are going to fold over, and we're going to start seeing some flip-flop action here happen finally on our weekly. And e-signal actually, excuse me, starts their, they don't do, let me see how to state this properly. They do weekly closes on Monday morning. So again, Monday morning being a little bit before 9:30 on Monday morning. So it's a little weird. That's a platform that we use for data usage. We've got an API link into their data usage platform. So here's the daily situation. We talked about this last week when we started going from 40 into 80, this 253 number on our daily. And for guys who are not watching right now, what we're talking about is internal breadth of the total compilation of the S&P 500 stocks. So as we were in the 40 range and everything was hunky-dory, we started getting into the 80, 90 range on the below the box daily situations. And at the same time, we're starting to roll over on our 60s and 240s. 240s is a very powerful crossover, by the way, when we cross from positive breadth to negative breadth in this case. But then last week, right before the announcement, the unemployment report, we started actually seeing this number go from 80, 90 up into 140. And you know what happened on Friday? We had a big 300-point Dow sell-off, and now we kind of have really crossed over. And let me just kind of point that out to you. So let me blow this up, and here we go. So that's when we had, we started having some rattling around crossover then, but then, obviously we seriously crossed over on March 5th on the dailies. And let me just tell you what day it is here. That was Thursday. Okay. So we started getting some hints of it around the 3rd with the 240 crossovers. We started talking about cracks in the armor. We started looking at this on the 4th, some daily crossovers, and then finally had a serious daily crossover on Thursday. And then Friday, the bottom fell out, but I know you don't want me to be a Monday morning quarterback. Let's talk about what's going to happen moving forward. But we also talked about a strategy to possibly play. I want to kind of look at that. And that strategy, for guys who are not watching here, and I've got the S&Ps up, and we talked about, in fact, I think around Tuesday, Wednesday before this happened, and the market was still kind of moving up to 2110, 2105 in that area. Then we talked about using 2100 as a leverage point on the sell side, and we talked about being out of the marketplace a little bit Friday's pre-market. And we always talk about when big reports are coming out, is it worth the risk to just kind of throw the dice and be in a particular position or trade? If you're going to do that, it more than likely might need to be a light position. But we talked about let's trade the reaction. There was plenty of really good pressure points during the day Friday to sell that all the way down, namely when we retraced back up into 2100 and then retraced back up into 2084. Those very important numbers. But what I'm showing you right now is a situation. These are our March options, and this is the March S&Ps. And we talked about 2070. All right, we talked about the 2070 calls, and we talked about buying them at 40 when the S&Ps were about 2107, I think 42. So they had about 5 points of non-volatility, non-premium. Basically, they had, 42, 37. Okay, so they had 2070 calls. They had about 37 points of intrinsic value and 5 points of fatness, I would say. So as we look at the 2070s now, let's just look at them, because we talked about looking at this as the VIX would explode if we had a market sell-off, and then we take a look at what the total mousetrap looked like at that point. Now we're trading we're right at 20 points lower on the calls. So the calls are basically now sitting with 21 points of premium, 22 points, let's call it, rounded off. And let's take a look at the S&Ps. Going back to our S&Ps. So the sell-off was 20 points in the calls. We lost 20 points in the calls. But as we look at that 2105, let's just call it down to 2172, that was 35 points in the S&P. So basically you were risking 5 points at that stage, and we made, let's see, what was that? Let me do the math really quick. 35 minus 20, so 15 points. So a risk reward with a lot of time left, actually, I might add, of 3-1. And I know that's not making a ton on a massive sell-off of 35 points. But the point of this is the market could have gone straight up. You would have been suspect, even at expiration, to only 5 points of loss, and more than likely about 2 or 3 if we'd have just kept going up and rattling around up there before we sold off. So the risk reward was more like 4 to 5 to 1. So right now, what do you do? So let's take a look at the S&Ps. And let me pull my clock over here so I don't. Okay, so we talked about, on the March contract here, we talked about 71, 72 being the target-rich environment down there. Down here, we've hit it. We've got a lot of S&P stocks rolling over. The breadth, more than likely, is possibly going to cross over on a weekly basis. That's really, really cool, guys, because as we look at this, a lot of times, when you're at major inflection points, you have breadths cross over, and we got to kind of keep that on the radar screen, just to make sure as you watch the market open today. We got to keep our, what's that? Eye on the shadow, Beretta. What was I don't remember keep your eye on the breadth around 2072 as we open up, and we may actually want to opt out on buying this inflection point. So right now it's kind of a wait and see. I'd rather the breadth come out and kind of tell us what to do at that stage on the long term. But the cracks in the armor actually gave us a really good 30, 35, 40 point move down, right? 2084, we closed below. This is the daily situation on the S&P. So you got some intermediate technical damage for sure. But again, this is again, weekly takes precedence over daily. We're down the line, and we've got to pay attention to 2072. So I don't see any reason to go in here and start backing up the truck and buying this right now until we kind of see what the scanner and the breadth's going to tell us on the opening. We had a really good move down. A lot of things going on here that aren't going to, they finally, the dollar keeps going up. The market is like the strong dollar, but at some point that becomes negative returns. And we may be at that stage right now, looking at the dollar. I'm not saying the dollar is going to come off. I'm just saying the dollar could actually now start, people that trade, S&P futures for that matter, may not like the dollar going up anymore at this stage, because it's been it could be a balancing act here. Let's just see what's going on here. Okay. Now, as we talk about all this, we've got to go into the bond notes situation. And, what happened on Friday? Bonds and notes sold off. So now, now market has generally liked lower rates, has generally liked a higher dollar. Now market seems to not be liking higher rates and not like a higher dollar. So you got to kind of take all this into consideration. And the technical damage really for the first time has happened on the 10-year and the 30-year. All right, let's just go to the 30-year. So again, here's the 30-year. There's that kind of rattle around below and move lower. But right now the technical damage has happened on the 30 and the 10-year. That's the summation of what I'm saying. And we've got some technical damage started on the S&Ps. And the worst thing in the world, a lot of these fund managers have got the benefit of the double-edged sword. Buy equities and buy treasuries as a hedge in historical terms or in historical lookbacks. Those have been, market goes down, bonds and notes go up, market goes up, bonds and notes go down. So, and you've got a currency hedge in there too. If you're a really good portfolio manager, using the dollar index usually as your currency hedge in that three-pronged attack to manage someone's money. But right now, this could set up extremely negative for portfolio managers now, because now they've got the benefit of the double-edged sword going up, but they might get the negative of the double-edged sword going down. And that would not bode well for IRAs and the mutual funds of the world. Let's take a look at gold. We talked about staying away from this thing on the long side last week and the previous week and the previous week. So right now, what do you do? I think we're in no man's land down here. There's not a lot of reasons to step in and buy this at all yet. Here we are. We've got some support, previous some for lows on a weekly down here at 1156. But again, I think this is somewhat of a crapshoot trying to buy gold or sell gold down here. Don't have a lot to hang on to. Let's take a look at the DAX. Again, euro headed down, DAX headed up. That's just the way that goes. And we're going to take a look at the euro. And we talked about staying away from this. This is not on sale. Ignoring the divergences in our navigator because of the overhanging fundamental news. Everybody's talking about this going to par now. I can't disagree with them. We've been talking about that for a while, leveraging the short side, finding the inflection points, waiting for these rallies back into those inflection points and using them on the euro. And here's the 240, the regulation of that trade down. Again, found a selling point 109.05 this morning. And we'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Man, thank goodness it's warming up. I mean, warming up not being less than 0 Celsius. That's a victory in itself. But starting to feel the possibility of some green shoots, literally, not from the stock market, but from actually the earth coming out around here, which will be nice. We're taking a look at, yeah, I hear you, Jay. This has been crazy. Taking a look at our scanner, we've been talking a lot about, the theory has been and always will be, in my mind, markets up significantly, start seeing the cracks in the armor. Let's find the weak stocks via the profiles, and let's step on the gas pedal with the short side on those stocks, because they, in theory, should fall faster than the strong stocks, and vice versa in a weak market, trying to find strong stocks. That's a real good general concept to always take a look at when you're trying to figure out, the market's been up big or the market's been down big. What do you do as a trader? That's always been something I've been able to fall back on, and it's always been a high percentage situation to try to weed out one or the other. And the thing that weeds out one or the other really good for me is to use these, filters. Did I say filters in the scanner that are going to basically differentiate what those weak and strong stocks are relative to the profiles. And if you've been following the show for a while, you know that it makes it pretty black and white, in my opinion, how to look at some of these instruments and be able to use the inflection points as you can mouse over and get those relative to each time frame. Or some people are trading long term, some people are trading short term. We've got people, by the way, excuse me, on in the Bloomberg institutional world that literally use the scanner just for 60-minute crossovers because they're trading momentum, and this is something they look for. So, for instance, Ameriprise Financial Services, AMP, they would be literally using green light, red light, yellow light to trade it, and they kind of ignore everything else. But they're creating a lot of commissions and enjoying that, I would assume. So we took a look at a couple of things lately, Chipotle, CMG, and we also took a look at Archer Daniels Midland, and I'm just kind of going through the stack here of some weak things from the past that we were trying to identify before this market fell off. Let's just see how they acted. ADM. And actually, Tom and I were talking about this, sitting on the lows, not cooperating. Didn't fall through, massively huge, but this is why we were looking at it. This 47.19, we're trading 46.25. This is a stock that's not an internet stock, and it's not going to go out of control. It's a heavily commodity related situation. But as we showed the weakness and the reason that we had been looking at this from a relative strength standpoint is we were looking at the cliff being 47.19. Wasn't a lot of points, but again, wasn't a lot of risk. And if you're playing poker, you're betting on games, you're Carl Icahn, all those guys are managing risk. And if you're in that trying to manage a bet or manage a position, you always should be concerned about what's the downside, because that downside that's where they take you out and you can't play anymore. And the downside, being concerned with the downside is in this instance with Archer Daniels Midland was very, very low. We're going to take a look at Ralph Lauren. I hope I said that right. We also took a look at this one. We just been beating the table about 137.96 being the leverage point, and showed its hand early and obviously sold off quite well as a low risk trade down to 131. So again, it's about a 4% move down from where we were talking about at the bottom of those unfair lows. And that coincided with that weekly at 138.20. So this was a pretty good setup. The scanner found it. A couple other things that we were looking at, and again, it's pretty easy to pull up stocks here and see what sold off, but I understand that. IBM, 158.50. This is, we were looking at getting below 160 again and leveraging off 163. 5 points, man, what is that? 3% move down, more than likely, in IBM, since we were talking about it. Let's take a look at a couple more stocks. We're going to take a look at the yen when we come back. Let's see. I hear the music. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Looking at the yen right now, 120.42 is that weekly close above last week, and now we're coming back into that, using it to some degree as support here. Let's say we've been a low today of 120.61, so not quite retested it yet. But you know, this has been the gift that keeps on giving, and you know, we talked about the latest leverage point, 119.93.94, and that's the way the picture looks, and looks like we are validly breaking out of that little compression mode we were in on the end, and now the high that it seemingly will shoot for is 121.84.85. Be on the lookout for that. That's your target initially, but again, things on their highs go higher. I think we'll probably blow through there. So it's a good primer on kind of like going through 100 area like on stocks. Keep your eye on it, and let the 240s regulate this thing for you. Here we go. The yen been betty good to us, as Garrett Morris would say. Do you guys ever find that you start whistling the TFNN tunes that are in the morning, in the shower, anything like that? It's maybe Tom's putting subliminal stuff in those ads. I'm just I mean, I got a TFNN tattoo the other day. It's kind of weird. Tom's pictures on the wall. Just kidding. Here we go. Just seeing if you guys are awake. Here we go. Let's take a look at the NASDAQ. Let's give some numbers. We had that sell-off. We talked about the targets down below of 4,400. And we met them. Okay, so that was what, you know, the NASDAQ wasn't the weaker of the two index futures that we look at. But we talked about that being the stopping point, and lo and behold, looky here. So met some targets, and again, the NASDAQ breadth, going back to our scanner, wasn't the weaker of the two, but let's just take a look at this. We did fold over. So these weeklies are going to really seriously ratchet and adjust on the opening here. We got a lot of weekly things that are going to change on the e-signal data feed. So just be aware of that. That's not exactly indicative of Friday's closes yet. So this is kind of a sit tight situation. But the NASDAQ numbers, what do you do now? I think you don't do anything right now. You sit tight. We had the move we were looking for. And right now, as someone has explained this fully to me via an email, don't look a gift horse in the mouth. Had no idea what that meant for, how long have I been alive? Until someone explained it to me. Nice explanation, though. If anybody wants to know the explanation, I'll forward it to them. It's kind of long. Let's take a look at silver. This is the May contract. We talked about 1588 and that 1587. Here's the unfair lows on the weekly. 1587. We've met them. What do we do now? I mean, I actually like silver here, believe it or not. I know we've had some technical breakdowns on the daily. I know gold is taking a dump right now. But if we can get back above 1587, and I know we closed, let's see, where do we close? Close. 1580, 81. I kind of like the way this, this is kind of sitting here right now. It's not, gold is obviously just getting its head handed to it lately. Silver's kind of hanging in there, obviously. If we can get back above, only get back above 1587 and actually at least have a daily close above there, I'm going to feel much better about trading that back up into 1622. And you might say, well, God, that's not a big move. A 50-cent move in silver, actually, you can corral a decent amount of points and money on a move like that. So don't look a gift horse in the mouth. That's the theme for today. Don't look a gift horse in the mouth. Let's take a look at crude oil. All right, so we've been kind of tooting the horn about trying to stay long above 50 basically with this, and right now we've had to close below 50. We're trading 49.50 right now. I still like the action on this. We've had some reports come out. They were relatively bearish. All the news on CNBC for the public to digest and jump into the market as they hear things on CNBC, which I think some of the things they say on there is quite criminal, but to the investor. But getting back above 50 and having a close above 50, that's going to be real important. So right now, what do you do? I'm still trying to hang in there. It hasn't, with the noise factor in, I'm still trying to hang in there with the oil trade, and that oil trade is a little. Here's the long term. We're in the middle of a balanced area, 53, 59 up top. That's going to be my targets again, and long term stops have to be. You got to be out of this below 46. That's where all bets are off. So trading this with a little bit lighter position. You don't have a ton of leverage here being in the balanced area in the long term, but I still like this trade above 50 to try to reach for that 54 general area. Now, as we talk about that, let's take a look at the XLE. Again, this really had not gotten back above this 78.81. We talked about waiting until that happened. That was our support area to try to deal with last week, and then we obviously had the move down. So again, this is a really good stingy way to trade the XLE, is to look at the long term and understand that we have had some leverage on the upside, but looking at the daily, using these daily profiles to regulate that type of trade. And when we got below here, it was time to sit on the sidelines until we got a close back above 78.81. And now we've saved ourselves basically 2 whole points in the XLE by waiting patiently. And that's nice. That's really, really nice. So let's take a look at let's take a look at our oil stocks really quick. Let me get rid of this sort. And let me get over here and let me clear that. And let me go back into, let me select none, and let's take a look at the XLE and some of the stocks. And I've been kind of, let me just make sure we don't have any filters on. Yeah, cool. All right, so as we look at this, we've been really focused on trying to buy some strength here. A lot of these things have turned south now. Anadarko APC, let's just take a look at that one. Been really happy with the action on this stock. And as we cross below these 85, 88s, that was the intermediate support area, but 83.49 unfair highs coupled with that breakdown on the daily, you got to sit tight on this one now. Getting back above 83.49 is going to allow you to kind of get back in the water on that. But right now we're in the balanced area. Anything can go down here. And that's kind of what stops are for. Okay. Let's take a look at something else that was on the radar screen. Let's see, CVX. I think we were looking at CVX. I know we weren't looking at Halliburton. CVX. Let's just make sure that was the one. It was PSX. Excuse me. PSX. Was that it? PSX. Yes. Yeah. Okay. So PSX Phillips. This is what we were looking at. This is kind of the, in my opinion, the really serious buy point at 73.61. And we talked about 75.36 being another possible buy point for this. I love the way this stock is acting. If we can get any help whatsoever from crude oil, this is the one that could explode on the north side. But I think, if you're trading it from a position standpoint, you got to have stops, big time stops below 73.61 on PSX. All right, let's take a look at something that, seriously reversed on Friday. 24.47, we're trading 24.23. This is the XLF. I still like this trade. The yield curve could be widening here. These banking stocks would enjoy that, but I think the broad market uncertainty right now could drag this thing down. But the good news is you can still put stops above this 24.51 based on your appetite for risk, and that's coupled with the 24.47. I love the way this thing reversed on Friday. Would have been nice to see this sell off a little bit more, but can't have everything in one day. So pre-market 24.23 looks like that's where we're at pre-market today. So that's where the XLF is, and we got to take a look at the XLV, the healthcare sector. And we've been talking about this might be the safety trade, and it has been. This thing kind of gave it up on Friday. So what do you do now? 71.71 was the stop out point on the intermediate trade. 69.34 is kind of the big time leverage point on this. But again, I'd use the dailies to kind of regulate this. I'm sorry, let me just go back to that. So you've got 69.34 and 70.43 sitting down there, daily and weekly information. That will be a massive collection area for the XLV right now. I think you got to be out of this on the intermediate trade. Wait again. You had some really good moves. Did I say move? You've had some really good moves in this on the north side, and even in the middle of all the the uncertainty in the S&P since October 17th, this has been. See, 110, 60, 73. What is that? 13. You've had a 20% minimum move in this since we had the weekly crossover in around October 17th, right there, or the daily crossover, no, the weekly crossover. And we've been talking about buying support. This was the relative strength trade. It's still the relative strength trade, in my opinion. The maximum support, again, 69.70 on this particular stock. But to be stingy, you might want to wait until we cross back above the border, 71.71 on the intermediate trade. I hope that makes some sense. Let's take a look at Apple. Had a situation, the news about going into the Dow, and that caused some shorts to just get freaked out there. In a matter of minutes, it went up 3 points, but now, man, get get this back. Now we're going to take a look at the daily situation. And we've had 2 daily closes, and we went right up into that 129.63 area when that news happened, and the daily up for highs were 128.75. So again, daily up for highs were 129.63. We reached a high of 129.37. So almost hit it, backed off. This is actually kind of bearish here. It's 127.24, closed below. Market internals are shifting a little bit. The market is not liking and not gonna like this higher dollar and actually higher rate situation on the treasuries. You know, what caused all that? Look at Saturday morning's newspaper. You'll find out that the U.S. economic data seems to be continuing to point towards a rate cut, but you know, are they going to come out and actually say, not a rate cut, I'm sorry, a rate increase? Are they going to actually come out, and is Yellen going to come out and say that she's going to actually raise rates definitively? No, because they've got her family in the closet. Feed them through a little hole. I'm just kidding. She's going to have to at some point say that. Now the market's, I think, trying to digest that. But, you know, what's a quarter point rate hike in the grand scheme of things? I mean, in my opinion, these 10 years, same situation happened before. We were at like 4 or 5%. You know, these rates are super low, but you know, the land of free money may be coming to an end. Maybe. That's the key. All right. So as we look at Apple, we know the story there. We know the story on the NASDAQ. We know the story in the S&Ps. This is a wait and see, guys. Remember, we met our targets down below on the NASDAQ and the S&Ps based on those cracks in the arm of the breath. These are S&Ps. Even though we're kind of close below, we could easily retrace back up into 2084. That would be super cool if that happened, in my opinion, especially if the breadth stays relatively negative. Then, you know, you kind of get the benefit of the, you know, the way the bars look nice and cool coming off of this 2072 general area back up into 2084. You know, it paints the picture cool for the chartists, and then the 2084 would be the sell point, in my opinion, with stops above. All right. Let me just tell somebody I'll call them right back. Somebody desperately telling me there's a technical issue. All right, so that's the story on the S&Ps. Again, sit tight on the NASDAQ too. We're going to go to break here in just a bit, but this is a wait and see. Let's just, you know, we may have a little bit of retracement up here. And that retracement up to be sold is, I don't think this is going to be reached, 44.34. But we'll talk about that when we get back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I hope everybody's getting ready for the NCAA basketball tournament. I surely am. God, I love this time of year. And UNC will probably. God, did you see the? Oh man, they lost to Duke. That was that was tough to watch. Had the lead again. But anyway, March Madness is coming, and it's always a good thing. NC State. I got to do the token wager on that team, of course. Here we go. Let's take a look at a couple of things before we go. Tesla. You know, this thing's had some relative weakness lately, but again, this is Custer's last stance for this. 193.70. We've been talking about that. It's hit it, and we're now approaching it and on it again. 193.63 pre-market. You know, guys, there are better longs out there. Watch out for this one. We could do a flush. You got to pay attention to this. This is, again, you can take some shots right here, but the stops are going to have to be in order. I hear you, Fletch. That is possibly true. It's just almost, there's some players getting into this, and that battery technology. I don't care how organized you are in their very sanitary looking outfitting places, I might add. It looks cool on film. It looks very cool. But there's some other people getting into that marketplace, and that's a fact. And they'll catch up with the technology at some point. Here we go. Here's the Australian dollar. Yeah, I hear you. Could be a lot of. You're right. Here we go. Australian dollar. This has kind of been the gift that keeps on giving. Had another leg down, 77.74 now. The stop oriented above. I think this thing could still fall apart. We did, we're sitting down here on some major support, but again, I don't like buying this support. I don't, again, this is, turn the wrench the same way. I don't think that this thing's on sale down here. Some guys were sending me some emails about that. The Australian dollar's not going to rip your face off if you're wrong. It's a little bit more docile than the other currencies, but again, I don't think there's any reason to try to pick battles down here. Let's take a look at this one, this Canadian dollar. Let's take a look at this. Profile appearing well below price action on the long term. That's bullish, as you know. We had that creeper trade above the 125.43 area. Now we've closed above and we're coming back. That's going to be your support on the Canadian dollar to move higher. And I can't believe I'm saying this. But again, the technicals are the technicals, and this thing now, you got a buy point on a pullback at 125.43 for that powerful close above, come back and retest trade. Hasn't quite done it this morning. Reached a low of 125.74. Unfair high is 125.42. So I wouldn't step in the water yet. The good news is that the breakouts happened, and that's really cool for the longs on the Canadian. All right, just to go back on the S&Ps. 10 seconds left. We're looking for a possible retracement back up into 2084. That would be nice for a leverage point on the short side. Remember that the breadths have started crossing over, guys. Thanks very much. Steve Rhodes next. Enjoy the show. We'll talk again.